According to Business Insider, Palantir has released a new 9-point manifesto on what it calls AI sovereignty, and for stock investors this is as much a positioning document as it is a philosophical statement. According to Business Insider, the company is telling governments and enterprises that how they approach control of their AI systems, data, and model weights will determine their competitive future. For Palantir shareholders, this reads like a strategic pitch aimed directly at high-value, security-sensitive customers who care less about cheap tokens and more about control, compliance, and mission outcomes. Business Insider mentions that Palantir urges institutions to keep their data in-house instead of handing it to what it paints as untrustworthy third parties. That framing is crucial. It positions Palantir not as a generic AI vendor, but as a partner for organizations that see data and models as national or institutional assets rather than just inputs for a cloud API. According to Business Insider, the manifesto also attacks what it calls token maxing, the practice of spending aggressively on AI usage, measured in tokens, without a clear link to real business value. From an investor's lens, that's a direct critique of the prevailing consumption-based model pushed by frontier AI labs and hyperscalers. Palantir is essentially telling the market, chasing high token bills is not the same as building durable capability, and buyers will eventually wise up. Let's break down the main themes of the manifesto and what they could mean for Palantir's business and stock narrative. According to Business Insider, the first core idea is that AI sovereignty dictates an institution's future, and that sovereignty is the precondition for choice. In plain terms, if you outsource too much of your AI stack, especially to a single dominant provider, you lose strategic flexibility. Palantir is betting that governments, defense agencies, and large enterprises will increasingly fear lock-in and dependency on a few big tech players or frontier model labs. From an investor perspective, this aligns with Palantir's traditional positioning, long-term, sticky contracts with customers who care about control. If the sovereignty narrative gains traction, Palantir's value proposition becomes even more differentiated versus pure cloud AI consumption models. That could support pricing power and contract durability, especially in defense and critical infrastructure. According to Business Insider, the second theme is that data retention is a treasure, and transferring it exposes institutions to serious risk. Palantir frames the customer's historical and operational data as the core source of competitive edge, and suggests that giving others control over those data pipelines hands over both your past winning strategies and the means to generate future ones. For Palantir investors, this is important because the company's products, like Foundry and its AI platform, are designed to sit inside the customer's environment, integrate deeply with internal data, and maintain strict controls over how that data is used. If customers increasingly see data as something that must stay under their direct governance, Palantir's architecture and deployment model could become more attractive than AI services that centralize data in external multi-tenant environments. Business Insider notes that Palantir criticizes token maxing as something that hijacks value orientation and weakens institutional intelligence. In other words, if a company optimizes for spending on tokens rather than measurable impact, it's mistaking motion for progress. This is a direct philosophical clash with the usage-based models of many large AI providers, where revenue growth is driven by increasing token consumption. From a shareholder's point of view, there are two key implications. First, Palantir is signaling that its business model will lean more heavily on value-based pricing in software-style arrangements rather than chasing raw token throughput. That could mean a focus on outcome-based pricing, platform licensing, or integrated solutions. These can support more predictable, high-margin revenue streams if executed well. Second, Palantir is trying to frame competitors that primarily sell API calls and tokens as misaligned with customer value. If customers adopt that narrative and become more skeptical about runaway AI bills, Palantir can present itself as the disciplined, enterprise-grade alternative that optimizes for outcomes, not for token volume. According to Business Insider, another key point in the manifesto is that controlling your own model weights is equivalent to controlling your fate. Palantir describes model weights as a distilled form of an institution's accumulated knowledge. Allowing another company to control those weights, including how they're trained and updated, means allowing your competitive edge to migrate. For investors, this underlines Palantir's push toward enabling customers to build and govern their own proprietary models, or at least to own the specialized models trained on their internal data. This is not a pure model-as-a-service approach. Instead, it is, use commercial and open models as components, but crystallize your institutional knowledge into weights that you own and can run wherever you choose. This aligns with a broader market shift. Many large enterprises and governments are moving from generic, public models toward domain-specific models that they can harden, certify, and govern. If Palantir can become the orchestration and governance layer for these sovereign models, it could cement a central role in high-value AI deployments. Business Insider reports that Palantir insists there is no contradiction between sovereignty and alpha. In finance and technology, alpha refers to excess returns or superior performance. Palantir's message is that the same architecture that keeps data and models under institutional control is also the one that maximizes the ability to generate and compound competitive advantage. This is important for investors because there's often a perceived trade-off. More control and compliance can mean more friction and slower innovation. Palantir is arguing the opposite for its target customers. It is saying, centralizing control over data, models, and decision workflows is the only way to reliably generate repeatable insights and protect them from being commoditized. If that message resonates, Palantir could secure a reputation as the infrastructure layer for strategic AI, particularly in regulated and sensitive sectors such as defense, energy, healthcare, and financial services. Those are markets where customers are less price-sensitive and more focused on trust, auditability, and long-term advantage. According to Business Insider, the manifesto then turns to the dangers of politicizing technical decisions about AI sovereignty. Palantir claims that technopoliticization is the wellspring of what it calls false sovereignty, decisions that appear to reduce dependence but actually limit agency, especially in Western defense contexts. For investors, this is a window into Palantir's geopolitical narrative. The company has long championed closer alignment with Western governments and their security interests. By warning against political theater and emphasizing practical, technically grounded sovereignty, Palantir is appealing to defense and intelligence customers who must balance national autonomy with interoperability and battlefield effectiveness. If Western defense establishments embrace this view, they may favor vendors whose systems can be deployed on domestic infrastructure, integrate classified data, and still interoperate with allies. Palantir is explicitly aiming to be that vendor. That could translate into more long-duration defense contracts and deeper integration in command and control systems, which historically have been high-margin and strategically sticky for the company. Business Insider notes that Palantir stresses real expertise as existential. The manifesto warns against allowing politics or favoritism to drive technical decisions, arguing that this rewards those best at politics rather than those who are right. Palantir urges institutions to listen to people closest to the problems, not those who are simply the most persuasive in public debates. From a stock perspective, this is both a cultural stance and a commercial pitch. Palantir is aligning itself with operators, engineers, analysts, and warfighters rather than with purely political or bureaucratic decision-makers. The implied message to potential customers is, we build systems for real missions and real operations, not for press releases or political optics. If Palantir can continue to demonstrate operational impact in real-world deployments, particularly in conflict zones or critical infrastructure, this emphasis on operator-centric design becomes a strong differentiator. Investors should watch for case studies, government testimonials, and repeat contract awards that validate that claim. According to Business Insider, the manifesto also advises institutions to learn from organizations that are actually winning or consistently delivering results. In particular, it suggests that institutions facing existential threats do not have the luxury of making technical choices based on ideological preferences. For Palantir shareholders, this plays into the company's narrative of being battle-tested. Palantir often highlights its work in counterterrorism, military operations, and high-stakes governmental missions. By saying look at who is winning and copy them, Palantir is implicitly presenting itself as a proven solution provider in life-or-death scenarios. If this message sticks, it can help Palantir in competitive tenders where decision-makers look for evidence of performance under pressure rather than just cost or marketing claims. That can support contract growth in national security, but also in sectors like healthcare during crises, supply chain resilience, and cyber defense. Business Insider mentions that the manifesto concludes by urging listeners to pay attention only to institutions, countries, and people with a track record of being right. Judging correctness based on who you like is described as misguided. In the context of AI, this is a direct swipe at some frontier labs and big tech incumbents that have enormous public profiles but whose large-scale AI deployments in mission-critical environments are still relatively new. Palantir is effectively claiming that its record of operational deployment and delivery in the field is more relevant than hype or popularity. From an equity perspective, that is part of a broader strategy to differentiate Palantir from other AI names that may be perceived as more innovative on the research side but less proven in hard operational contexts. If investors come to see Palantir as the default choice for governments and enterprises needing reliable AI in dangerous or complex environments, that perception can support premium valuation multiples, especially relative to peers with more fragile revenue bases. According to Business Insider, Palantir's CEO Alex Karp has been publicly critical of Frontier AI Labs. Earlier in June, he stated on CNBC that these AI companies do not understand how unlikable they are, and that their products do not work as customers expect. For investors, that rhetoric serves two purposes. First, it sharply contrasts Palantir's perceived culture with that of consumer-facing or research-driven AI startups. Palantir is casting itself as a pragmatic, customer-first engineering outfit rather than a hype-driven lab. Second, it lays the groundwork for Palantir to capture customers' disillusion with initial generative AI experiments that delivered flashy demos but limited tangible results. Many enterprises have experimented with chatbots and copilots only to discover challenges in security, accuracy, and integration. Palantir is positioning its AI platform as the next step, operationally grounded AI that ties into real workflows and governance structures. Now, how might all of this feed into Palantir's stock story in the medium term? From a revenue standpoint, if the AI sovereignty narrative resonates with governments and global enterprises, Palantir could see increased demand for deployments that keep data on customer-controlled infrastructure, including on-premise and classified environments. Allow customers to orchestrate a mix of public and private models while retaining ownership of mission-critical weights. Emphasize governance, auditability, and secure sharing across agencies and allied nations. Those deployments tend to be large, complex, and sticky. They often require substantial upfront integration and configuration, translating into strong services and platform revenue, followed by long-term software subscriptions. On margins, a shift from commodity token sales toward integrated, high-value platforms plays to Palantir's strengths. The company historically has operated with strong gross margins and has pushed to improve operating leverage. If customers increasingly favor architectures that encapsulate both data integration and AI governance under one roof, Palantir's per-customer economics could become even more favorable over time. On competitive dynamics, Palantir is not trying to outcompete hyperscalers or frontier labs on pure model performance. Instead, it's choosing a different battlefield: operational sovereignty, model and data control, and alignment with Western security and regulatory needs. That strategy has both risks and potential rewards. The risk is that if the market continues to reward flashy consumer AI and broad-based, low-cost token access, Palantir's sovereignty-first positioning might appear more niche and slower growth. The potential reward is that, as AI spending matures and boards, regulators, and defense ministries become more concerned about control, security, and cost discipline, Palantir's approach could move from niche to mainstream in the high-end enterprise and government segments. Investors should also consider how this manifesto may influence Palantir's product roadmap. Expect continued emphasis on tooling that lets customers run AI across multiple clouds and on-premise while retaining central governance. Capabilities to train or fine-tune models inside secure environments, where weights remain under customer control. Features that connect AI outputs to concrete operational workflows, decision-making, and audit trails. If Palantir can execute on that roadmap, it will strengthen its claim to be the operating system for sovereign AI deployments. From a valuation perspective, manifestos like this do not directly affect cash flows, but they shape narratives that drive investor expectations. The AI theme has been central to Palantir's multiple expansion. This document attempts to refine that theme, from generic AI enthusiasm to a focus on secure, controlled, sovereign AI for serious institutions. If the market believes Palantir can capture a large share of that high-value segment, the company could justify premium multiples relative to more commoditized AI or software vendors. Conversely, if investors view this as mostly marketing with limited incremental evidence of adoption, the manifesto will be more noise than signal. So, what should stock enthusiasts watch for next? Keep an eye on new defense and government deals explicitly mentioning AI sovereignty, data control, or model ownership. Enterprise case studies where customers move away from generic token-based AI usage toward Palantir-style platforms. Product announcements that make it easier for customers to own and manage their own weights and to run AI workloads in strict regulatory environments. Any regulatory or geopolitical developments in the US, Europe, and allied nations that formalize requirements around data and AI sovereignty. If those elements align with the themes in this manifesto, then this document will look less like rhetoric and more like an early statement of a durable competitive strategy. To close, Palantir's new AI sovereignty manifesto is not just a philosophical essay. It is a clear attempt to stake out a defensible, differentiated position in the rapidly evolving AI landscape. For investors, the key question is whether customers will follow this path away from pure token consumption and toward tightly controlled, sovereign AI infrastructures. If they do, Palantir's long-term growth story could become even more tightly linked to national security, critical infrastructure, and high-stakes enterprise operations. Thanks for listening to today's episode. If you found this analysis useful, consider subscribing and sharing the podcast so you don't miss future deep dives into the companies shaping the AI and data landscape.